works, and then we kick things off. And it looks like we are live. Hey, folks, welcome to the Startup Tank, the pitch show that we do for the top climate and sustainability companies out there. This is your first time tuning in. It shouldn't be, but that's okay. TheStartupTank.com for more details. We do this every first Monday of the month. Yes, we've reduced the frequency so we can up the quality. Every first Monday of the month, TheStartupTank.com, or you can follow us right up there on YouTube. If you are watching on YouTube, make sure to hit the subscribe bell, and you will get everything you need to get. This is all brought to you by Forward VC and Climate Techies. Forward VC, I like to say, we're the accelerator to help climate and sustainability companies grow and scale faster. With our Partner in Climb program, we pair 1 to 2 top companies with hundreds of our top mentors and network community, more or less focused, less so on investing and indexing the market, and more so on business development, growth, connections to corporates, customers, clients, partners, pilots, because that's what you need to do in the early stages of a climate company, especially climate tech, because you got to prove it out before anyone else trusts you. If you need help with doing that, Forward VC, and you can, for more details. And Climate Techies. So Climate Techies is our global climate community. We're up to 14,000, I think, folks in the community, all focused on collaboration, innovation, helping each other forward, from startups, VCs, corporates, governments, SMEs. We run calls like these, as well as sector-focused and local city meetups, all with the goal of helping you advance your climate mission and your journey and career in climate, while helping all the rest do it as well. It turns out the best way to do that is meeting the best people in the space. And more details on that, climatetechies.com. Now, the Startup Tank. We haven't done it for a while. Maybe people are out of practice. I certainly am. So how it works, all the companies here, they'll have 5 minutes to pitch, followed by a gong. When their time is up, we'll have about 10 minutes of investor Q&A with myself, Carl from NCA, and David from Ecliptic. Ecliptic or Elliptic? Now I'm not sure. Capital, I always got to screw something up. I'll give them a chance to introduce themselves in a sec. And then at the end of the show, we'll decide on our climate startup of the night. We'll vote, and the winner gets eternal glory and gratitude, as well as a little bit of extra exposure. If you're interested in any of the companies, it's usually founder@domainname.com. And we'll make sure that the founders post all of their information as well in the YouTube channel, so you can reach out to them. Now, without further ado, I should probably hand things over to my co-hosts of the night. We've got the incredible David Neff with, is it Elliptic or Ecliptic? Now I'm not sure.
It's Ecliptic.
It's Ecliptic, yes. They're eclipsing everything else. What do you guys focus on? You want to share a little bit more?
Yeah, sure. We're about a $60 million fund out of Austin, Texas. We'll be out raising Fund 2 in the fall and into the winter. We focus on cybersecurity, identity, medtech, and life sciences software, and then climate and material science. So that's why I'm here. I'm our lead partner for climate, and we have a heavy interest in material science startups that are working on climate. And that's us.
Raising a fund, that's no fun. Carl, you want to share a little more about NCA? I have no idea what you're talking about.
Sure, I'd love to. Thanks. Nice to meet you all. I'm Carl, associate with NCA here in Northern Germany in Hamburg. And we're pretty much sector agnostic, fund size of just roughly about 10 mil. Actually, hybrid model between VC and acceleration model, because we focus individualized on our startups. It's not like we call batch accelerators. We try to focus specifically on your specific needs, on the startups that come through our process. I already said sector agnostic. We don't have a specific climate focus, but actually, as you know, we do 95% B2B SaaS, and as you all know, climate is getting more and more important for our companies that are invested in our fund. So yeah, more and more importance behind that, obviously.
Very cool, very cool. And with us, Forward VC, in addition to our accelerator, we open up access to all of our Climate Syndicate members to invest in those companies when they go through the program. More details at forward.vc. And if you're looking to find your lead investor, find other players in the space to connect with, we've got 1,000 plus climate VCs, accelerators, incubators, etc., all on our website, forward.vc or Climate Techies. You can find everything at both of those. Be sure to subscribe if you haven't. And now, without further ado, I've wasted enough time with the promotional stuff. I'll throw it a little bit in here and there whenever it pops up. It's time to kick things over to our awesome founders and companies. Let's put them on the clock. So the first one that's going to be pitching is going to be Annie and Jake, who I actually ended up getting paired up with here in Switzerland. They've got a great program to help startups and innovators. And these guys have some pretty cool innovations on what they're doing. You want to share what ClimaLinks is?
Of course.
And you'll have 5 minutes with a 1 minute shot clock. I hope you know how a shot clock works. And then you'll be good to go. You ready?
Great. Yes.
Okay, take it away.
All right. Thank you so much for having us here today. And once again, my name is Annie, and I'm here with my co-founder, Jake. We're both from ClimaLinks, a weather startup that helps construction and land development companies to work with weather, not against it. So adverse weather delays about 45% of construction projects worldwide, costing project owners and contractors billions of dollars in additional expenses and loss in revenue every year. Why such a high number? So to answer this question, we first looked at the accuracy of weather forecast. Over the last decades, we've got better understanding of physics, better satellites, and more powerful supercomputers to provide more accurate weather forecast. So this doesn't seem to be where the problem is coming from. So now we turn our attention to the type of information that's delivered to the end user. And of course, today we're looking at the construction sector. And here we have a weather report from the 1920s. And here we've got a weather app that we're all pretty familiar with. So over the last 100 years, the forecast accuracy has improved tremendously, as I mentioned already, and so have the graphics and the accessibility. What's still lacking information or innovation is the type of information that's delivered to the end user. So we're still receiving the generic information such as temperature, precipitation, or cloudiness, regardless of our individual weather needs. So in a way, the weather app has not moved beyond being just a mere replicate of the newspaper and being a passive indicator. So how about some of the construction planning tools? Here we've got the Microsoft project or a more conventional Gantt chart in Excel. And in most cases, the users don't have any weather information, although a lot of these activities depend heavily on weather. So going back to the beginning, the question in the beginning, why such a high percentage of projects are delayed by weather? And here we identify one of the key problems. So forecast accuracy alone is not enough to increase resiliency towards weather. Actionable insights require interpreting this type of raw weather we currently receive. And such action task can become very overwhelming quickly for a construction site with so many moving parts. So with the current approach, contractors are prone to avoidable delays, missed opportunities, and misuse of materials.
And so that's where ClimaLinks comes in. So what we're trying to make here today is what we call a weather relations management platform. You can think of it as more of a CRM, but for weather, where our competitors focus on accuracy, we focus on forecast usability. So in this example, a typical manager on the site would have to look at all of the raw weather information and interpret it for themselves. At ClimaLinks, what we try to do is translate it automatically for the user using indices from 0 to 1 that track each and every asset or task on a construction site. And so what we try to do is move away from a standard weather app, which is just raw weather information, towards a more custom platform where you can track all of your assets for risk or the tasks for opportunity. And what we're really trying to add here today is a fully automated weather analysis to our users. But because we're using indexes and tracking them through time, we can also extend weather intelligence to a 30-day window. And our platform offers proactive planning tools for them to actually overcome the issues. And those issues, going back to what Annie mentioned, is that we're trying to avoid delays, reduce damages, and have an overall safer workplace. And the way that we're offering this tool to our customers is, as you've seen here, as a dashboard, or if the construction site already has their own dashboard, we offer it through an API or Power Automate in the case of Excel.
1 minute warning.
And we're also offering hazard and TCFD indexes as well. And we're already post-revenue, but we're offering this as a % of the built value. And to make this all come to fruition, Annie and I are both from ETH. I recently received my PhD in atmospheric physics, and she's on her way to finishing hers. And we also have key advisors and external partners, including Steiner, who's putting our platform in many construction sites all over Switzerland at the beginning of next year. And today we're proud to announce that we're looking for a pre-seed round of fund of 500K, which will help us pay for key positions and also finalize our product market fit. So with that, we'd like to thank you for your time here today. And as we always say at ClimaLinks, let us help companies to work with weather, not against it. Thank you.
And your time is up. Very Swiss, nailing it right on the dot. Speaking of the very Swiss, how do you overcome or how quickly, or what is your plan in terms of growth and scaling outside of Switzerland? Because Switzerland is a small pond, and you could be a big fish in a small pond, but VCs don't want to hear that, and it's not going to be a venture scale model. So how are you thinking about and approaching that problem?
Right. First of all, with the model, we have global data. So the model or our product is set up to be easily scale up to globally. And we are already attending fairs outside of Switzerland. So recently I went to Expo in Munich. That's the biggest exhibition or fair in Europe for construction, land development, and real estate. And both Jake and I, we used to live in Canada, so we also have contacts there, and also my family, they're from Taiwan, so also have certain contacts there. So that's our plan to go beyond just the market of Switzerland to start with, at least.
Awesome. And David, Carl, you know the drill. Jump in whenever you got questions.
Sure, we'll do it.
Sure. Hey, Jake and Annie, nice to meet you guys. Thanks for the time today. Talk to me about who's building the platform for you today. Was that Figma that we saw, or was that actual software working? And then my second question for you is, who's your first hire? Seems like construction is getting pitched thousands of ideas all of the time, as you guys know and have experience in. So tell me a little bit of who that first hire is for you guys, and then talk to me about who's building that platform for you.
So our first hire, outside of Annie and I, would be the CTO. And once we can do, or the person that would eventually become a CTO, full stack developer, more or less. And then once that's possible, then I can kind of focus more on the science part. Because right now I'm trying to juggle both the science and the tech part. And to answer, I guess, your second question, the logo here, the company is called Kata Solutions, and they help us build out our platform, except for the secret sauce, which we try to do in-house, which is mostly the ingesting of the weather data and then converting it to these 0 to 1 indices that we do in-house. But the full stack development, getting it on Google servers and all of this is we outsource it to Kata Solution.
Maybe just to add there, I think you also asked if you were seeing Figma or our real platform. I believe the screenshots there were actually already from our real platform. The platform looks almost exactly the same as our Figma, but what I can tell you is we're looking at about 4 weeks time before we release our version 1 of the platform for testings, and we already have a few pilot project partners lined up for testing.
And these pilot projects customers you have, are they located in Switzerland, or where are they located?
Yeah. Both in Switzerland and in Canada, actually.
Oh, okay.
And how did you land those pilots? Let's add that on top.
Right. So I used to work at a civil engineering firm before I moved to Switzerland. And so the Canadian pilot project partners there are through my old contacts. And the ones here, so ClimaLinks, Jack and I were part of the Swiss PropTech Association. And through this association, I would say we're a pretty active member. And through that, that's how we made contacts and landed on a few pilot project partners there.
Interesting. No question, but maybe part of just little advice going forward when you've maybe found product market fit and have your first traction going and feel comfortable with that. I know from past experience, working experience actually, that railway operators, just like Deutsche Bahn, where I've worked at, are actively looking for solutions like this. Partly for construction, yes, but also for operating and forecasting delays in train operations. So might also be interesting operating field for you guys, but would recommend for further along the road, right? Not overtake yourself now with too many possibilities in the market.
Great, thank you so much for that pointer. Yes.
And Jake and Annie, talk to me about who buys this. Like, what's the exact title inside of a construction company for your ideal customer profile?
So the person that would, I mean, I guess Annie would probably know better.
Right. Actually, so for land development company like Steiner that we just mentioned, one of the biggest builder here in Switzerland. So they're buying this to integrate into their platform so that they can, I don't want to use the word force, but ask their contractors to use it to avoid delays and reduce damages. So I think the person buying it can sometimes be different from the actual person who's using it, but general contractors, site managers will be the person who are actually using it for planning their operation. But also for engineering companies like the one I use for, who's also a pilot project partner here, already during the engineering planning phase, they plan to use our tool, and also their kind of construction administrative manager there, they would use this tool to work with the contractor.
That's great, but tell me who signs the check, whose budget, who writes this for you guys and says, yes, we're going to buy this, and we'll ask politely our general contractors to use it.
Right. Land developers, builders, that seem to be the main target, the primary customers right now. We find perhaps with the actual contractors, we're still finding our way in, but builders, land developers. And I would like just to add here also, so there are also other existing construction planning tools or platforms. So we are also in discussion with them. We're reaching out to those ones to incorporate our weather data on their platform so that their customers can benefit from our product.
Are they for usual the construction companies already paying for weather forecasting solutions, maybe? So the budget stream that you could maybe allocate to you, or how does it work for now?
I think most of the contractors, they still rely on the general weather app that we use every day. But as we already pointed out in our pitch, the current weather app doesn't give you insight about what's going on your site. Yeah. And what we offer is the indices and the planning tools to help them to track the weather. Yeah, so I think we are tapping into maybe perhaps not specifically the budget for weather, but the budget for software that they use to improve their efficiency.
What about the budget for hiring and employee management? Because if they see they're going to have too many people on the days when the weather sucks, or not enough people on the days where they actually can get a lot done, I assume there's something in terms of how they optimize that or how they incentivize people. Oh, we need extra people on board now to get this done.
Yeah, absolutely.
There's this one use case that keeps coming up when we talk to construction, is especially like in Italy, whenever it's too hot in the summer, they tend to have to bring their employees in like super early before the sun comes up to kind of get ahead of that heat. And so there is definitely this human aspect, especially in health and safety.
And just what's the biggest risk you guys see in the business? If you guys fail, why will it be?
Good question. Probably convincing people that it's different than typical weather, because a lot of people kind of think, oh, just weather, I'm going to just project onto it, that's just weather, not really go deep enough to understand that this could actually benefit them quite a lot if they just took it seriously, kind of. Like a lot of times, the weather isn't really, like a misuse of weather isn't actually due because it's like inaccurate. It's usually due because they completely misused it, or it was completely absent in their thought train. And we just have to kind of change this behavior somehow. And trying to do that is pretty tough. So I would say that's probably a big fight that we have to work on.
Awesome. Then you got to work on it and be a little bit more salesy and a little bit more enthusiastic on that would be my feedback on that. Any last questions, David, Carl?
Good, thanks.
No, I would just say, Annie and Jake, on the who's your customer, what
Better
I would
answer
love to
needed.
hear from you. Yeah, I would love to hear. It's the vice president of facilities and project management, and then the other one is the VP of workforce that's making decisions, right? And it's only 5 minutes to totally get it, but I think what I thought that was interesting was you were like, don't operate a crane today. So, in future demos, like explain why, how I made that determination. I'm not a crane operator and neither are you two. So like, how's the software knowing yes or no? And again, I totally understand you guys had 5 minutes, but give me a better answer on like who signs the check.
And if you don't know, say you've got calls set up with XYZ type of people and you're testing it out.
Okay. Thank you very much for that feedback.
Yes,
and thank you for the time.
Awesome. Let's then jump to something totally different. Doug, let's grow some fish. Sound good? Oh, we caught it. The cat got the tongue. The cat that's trying to catch these lab-grown fish.
It's not lab grown, it's cultivated.
It's cultivated. I apologize. I apologize. The verbs and everything are getting complicated with all the new options out there.
Yeah.
Can't wait to hear. Tell us when you're ready. You got 5 minutes.
Is the slide coming through? Can you guys see it?
It looks like it's coming through. I see something tasty and it's making me kind of hungry.
Yeah, so my name is Doug Grant. I'm the co-founder and CEO of Atlantic Fish Co. We are using cellular agriculture to make the world's most sustainable seafood. So as we just alluded to, so lab-grown seafood, which we call cultivated seafood. So this is not plant-based. This is taking the cells from an animal, growing them up in a bioreactor to make real meat or seafood. So it's not a plant-based replica. I've been covering this industry for several years with my podcast, Brave New Meat. Interviewed a lot of entrepreneurs and investors to learn the space of alternative protein. And really where I landed to start this company was I saw people doing this with chicken and pork and beef. But I think that's a really tough business model to compete with a new technology against chicken nuggets or against hamburgers. So we want to start up market with premium white flaky seafood. Now, seafood kind of gets a pass as a more climate friendly protein, but the devil's in the details. It depends on what species you're going after. So we are targeting fish caught in the wild that are overfished via trawling. So trawling is a really carbon intensive process. So pound for pound, this is as carbon intensive as most conventional beef. So the knee-jerk reaction is say, okay, let's just grow this on fish farms, right? We don't have to do wild caught. If you eat salmon, yes, you can grow that on a farm, but we are focused on fish that we call the market price fish. These are fish that don't grow well on farms. They can only be caught in the wild, and they're really, really expensive. So that's the core segment that we're trying to replace with cultivated seafood. These are huge markets. Globally, we're eating $250 billion worth of seafood per year. Domestically in the U.S. market, where we're going to market, we're focused on a $28 billion opportunity. And this market price fish segment, which looks small on this slide, is still $2.7 billion. So that's our initial target market to start up market before we go down market for these larger opportunities. So how are we doing this? Historically, the industry has been very, very vertically integrated, right? We're taking technology from pharma and applying that to making meat or seafood. We've gone with a more asset-light model. And this is just as the industry has matured, people are starting to specialize, and you don't have to do everything full stack. So where our IP is really being built around is cell line development for these premium market price fish species. And then we're partnering with folks that are doing the growth media and have exclusive license there. So that's where we're really building out our defensibility, and then outsourcing for the scaffolding and the bioprocess scale up, i.e. the bioreactors, to grow these in. So this was not a strategy that was available before. What we're doing is working. So we've been able to bioengineer cell lines. The one that's working the best is our black sea bass. We are north of 70 passages, which is really, really good for a pre-seed company. I can explain more about that. And it's growing really, really fast. So a 27-hour doubling rate. So black sea bass cell line is probably our most likely go-to-market species. Where are we going to market? With restaurants. Why? Because most seafood in the U.S. is already eaten in restaurants. We've got LOIs with 3 major restaurant groups here in the Washington, D.C. area to showcase our first products. We've got a team that can actually do this work. So I have a business background and also served in the Navy. I've done 2 other startups. All my rest of my team is technical. I've got 2 technical co-founders that have PhDs in tissue engineering. Trevor actually went on to do his postdoc at Duke. He leads our lab operations. And then RJ did his master's in a lab focused on cell line. So all of our milestones for this round, we can do in-house. We've already raised $660,000 from experienced alt protein investors. We're looking to raise another $440K to close out this pre-seed round. You see the technical milestones here. All of that culminates with the most important thing, an MVP product demo that's a scalable product. This is not something that's a bridge to nowhere, dead end that you can't actually grow in a bioreactor. This is going to be a scalable food product demo. So we've got the right timing. We've got a great team. We believe we've got the right market vertical to go after with cell ag to really move the needle.
And you got 1 minute.
And I don't need it. Let's just jump to questions.
Awesome. Very, very good. Very good. Then I will bring the other investors back in. While I'm doing that, and you mentioned not a bridge to nowhere and things moving, how much capital do you need to get this to the point where it is market ready and you can really go to market? Because fundraising right now is a nightmare.
Yeah. One of our early investors told me, he's like, 2023, you got to be a cockroach. You got to survive. The funding is down this year. So I'll answer that in 2 ways. So if you follow the conventional path of what companies ahead of us have raised, it is really, really expensive. It is a lot of capital expenditure to build out a production plant. Talking companies have raised over $100 million. What we're trying to do with the model that's asset light is push out having bioreactors in-house. So we want to own as little steel as possible for this company. Our expertise is cell line development. So if we can do that, get products to market by licensing or leasing access to other bioreactors, which we've got a lead on some of those, we can do this for significantly less than the companies that are ahead of us when we build out a pilot plant and ultimately a production plant. So it's sort of a squishy answer, but I think it depends on how far out we can push in-housing our own bioreactors, which we want to do as late as possible.
Hey, Doug, thanks for the time. David J. Neff here. Talk to me about competition. I'm not super familiar in the space, but I think of Beyond Meat, Impossible. Do they, also develop a fish line, or are they specialized over here, or are they some sort of future acquirer for you as these big kind of alternative protein companies?
Yeah. Let me divide that up in 2 ways. So we'll talk about competition and we'll talk about exits. So we've got about 150 companies in the cultivated meat and seafood space. So using this technology to make products, or B2B companies support that. If you look down at the companies that are doing seafood, you've got about 15. When you look in the US, you've got about 4 or 5. Those other competitors are focused on tuna and salmon for sushi applications. So it makes perfect sense what they're doing. We're doing whitefish, things that are deep fried. It's a very different market segment, even though it's still seafood. So I think we're very deconflicted in terms of product lane and the technology. In the future, like, I think there will be industry consolidation, right? I think, you know, you might see some of the plant-based companies coming in here. I think a more likely exit is the companies like Tyson's and JBS and Thai Union that are big meat and seafood companies that are making investments in cell ag through their venture arms. But once you prove the model, once you get the cost down, once you get that first production facility, ultimately licensing this technology. So our business strategy is go to market first, prove the market, prove the technology, and then license this to big meat and seafood down the road. So maybe the Impossibles and the Beyonds decide to move over to cell ag in the future, but like a lot of their product roadmap and all their technology has been focused on plant-based, which is, you know, a great alternative protein, but I don't think you win the market that way. I think ultimately consumers want real meat and seafood, and I think the big meat and seafood companies are going to become protein companies in the future, making this an acquisition target.
And Doug, talk to me about those restaurants, right? I feel restaurants, bad margins, rough business sometimes. Sometimes they're up, sometimes they're not, right? Not the most technical buyers, maybe you're kind of understanding and then maybe having to explain that on a menu, you know, to people. And I'm sure you can help with that. But what's the scaling there? How does that work beyond? How do I get 100 restaurants, 300 restaurants? Like, is there a channel partner, or how are you kind of thinking about that?
Yeah. So our go-to-market strategy initially is to own the relationship and not go through a distributor and go to restaurants. And you are correct. They are very price sensitive. I think that's the beauty of coming in with seafood, because if you're trying to sell them chicken or beef, like, they're getting that very cheaply year round. If you're trying to go to them with wild caught fish, that's very seasonal. There's a lot of variability in the pricing. We call it the market price fish segment because they call it market price on the menu when you go to a restaurant, right? You have that awkward interaction with the server where you're like, well, how much is this, right? Like, that doesn't exist for chicken, right? Like, nobody does that.
Yeah.
So if you can actually win on price and provide the product year round with the same quality, that's what restaurants care about. Like, their food margins are 25% of their cost. So they are very, very price sensitive. And then to your point about explaining this, I think it's actually, you want to partner with restaurants that want to tell that story to the end consumer. If you just put this on a shelf at Whole Foods, like that drive-by, that's a very expensive customer acquisition to explain what cell ag is to someone in a Whole Foods, right? But if you can explain it to a restaurant and they can go and they can say, hey, this seafood is mercury-free, it's antibiotic-free, it's microplastic-free, it's the most sustainable, climate-friendly protein ever made. Like, that's the stories that restaurants want to tell to differentiate their products. And I think it depends on what restaurant group you get into. So the ones that we've partnered with, those LOIs, I've got 3 LOIs, but they actually represent 50 plus restaurants. So it's a restaurant group, not just, you know, a single mom and pop restaurant. So I think that's the way to do it. And that's not a unique playbook for our industry. A lot of most cell ag companies are partnered with restaurants, but they're partnered with them selling the wrong product. They're trying to do chicken or hamburgers, and that's why we want to do seafood.
Thank you.
Right. I believe I've seen a few young companies really getting into the market also on artificial whitefish, right? So in selling to these restaurants, what's your sales mission? Like, what's your sales approach in regards to product? Like, how does a product compare to other artificial whitefish products, or what's the price point on that, on other artificial ways to have whitefish?
Yeah. So just starting from a wholesale perspective, you're looking at about $20 per pound is what restaurants are paying for these types of fish. So that's kind of the starting point, right? From a product roadmap perspective, we don't want to try to come in with a whole fillet first. You know, a lot of companies are trying to do their chicken breast, their steak. For us, the whole fillet, everybody wants to get there. But if you don't have a product roadmap ahead of that to get something out that we call like unstructured, I think you're going to fail, because you got to start. We're not going to be able to have 7 to 10 years like the first companies that did this to get to market. So you want to have something unstructured. So like our first prototype we're building out is what we call the black sea bass bite. So it's like a fish nugget. You can do fish and chips. You can do fish cakes. You can do dips, soups. We're still trying to figure out what that go-to-market product is. This first demo product with those LOIs will get us in the door so we can, you know, co-create, get more feedback from the restaurant, really figure out what that product roadmap is. But just from a technology perspective, it's got to be something that's unstructured. We don't want to wait until we can do the perfect fillet of fish before we go to market.
Right, understood. Another question. If, like, fast forward now, long road ahead, and if everything goes to plan as you would wish for, as it never does, but let's say it does, when would be the time for you to say, okay, we've gained a foothold now with restaurants and scaled really comfortably with them? When would be the time that we would say, okay, let's go down market, let's go into retail?
Oh, retail. I don't know. I don't know when I would want to actually go into retail. I think the restaurant market is huge. So just like a high level with my numbers, I'm doing this real time. So I know the seafood market is $28 billion in the US. 70% of that is eaten in restaurants. So I think what's that? So we'll call it 20 billion for round numbers. There's a big restaurant market that you can go after. And then I think the next logical market is to start licensing the technology to these big companies that are already doing meat and seafood, not trying to go into retail yourself. So I actually don't have that on the roadmap to take our products in, and maybe I'll have a better story for that in the future. But right now, that is not the primary path. It's licensing the technology to big meat and seafood after we do our restaurant strategy. So I don't have a retail strategy right now.
All right, thanks.
Awesome. Any last questions, folks? Then that's all you had to say about that. Thanks for joining, Doug. Thanks for sharing. It seems incredibly interesting. I would hand things over now to James Zhang. James, you want to share a little bit more about what you guys are doing?
All right. Let me share my screen.
No worries. Just let me know when you're ready, and then I can start your 5-minute shot clock.
All right. Are you able to see my presentation?
Looks good. Take it away.
All right. Thank you. So my name is James. Thanks a lot for your time. And then I'm representing Arboretica. And we are an AI company that basically builds AI platform to automate sustainability analysis. We have a little bit different story than most of the other tech startups. We actually started as a consultancy 2 years ago, where we basically built a core set of algorithm to automate sustainability analysis, and we started to work with our clients. Over the past few years, we've had a chance to work with some of the biggest names in the industry, such as the United Nations affiliates, the Nature Conservancy, WWF, and we've been basically pioneering some of the early success of AI-led, sustainability analysis to drive global, policy change and tracking and, corporate actions. But through the 2 years of experience, we found the big issue of the industry, which is that, people who work in this field actually struggle in the same way where financial analysts struggled, 50 years ago, where everything's manual. And like people in this industry is super manual. Meaning that, if you ask a random person in the industry, their daily life is basically, they do a Google search, find some reports, open the web page, read those PDF reports, 200 pages long, repeat and do manual reporting. And then there's just way too many data coming up every day that just can't keep up with this. When we first talked to a large European sustainability consultancy, they didn't even know a website can be scraped. Like this level of technology is new to them. And this is the industry that there's only 6 years left until the UNSG goes. So this is where we come in. And then, so basically our 2 years of, hands-on experience with the industry led us to this, AI platform where we're trying to automate the daily life of people in this field, coming from the automated data collection to help them understand the context behind numbers, which is a hugely important point. Verify the numbers and the insights, do automated reporting and help them track the updates. Basically, we're trying to become a AI-driven research system that will make their daily life faster and more scientific. So we actually come from a toolkit approach where right now we have 2 products currently building to solve the different type of needs of the industry. The first.
Did we lose him, guys?
Yeah, it looks like he's frozen.
Okay, it looks like he's frozen. So right now is a great time.
Where with ChatGPT.
1 sec, James. ChatGPT decided to cut you out for a sec. You want to jump back in and chat about what you were saying a second ago?
Oh, sorry. So I'm saying the second product that we have on the pipeline right now is called ChatNet Zero, which is kind of like a ChatGPT for climate change, that we're basically solving the source verification and the hallucination issue with a proprietary algorithm check on top. It was launched in New York Climate Week in September, got a really good attention from a lot of the institutions like Google and WRI for further work on that. So give you one example of how our algorithm and tool works. Our first customer of the benchmarking tool, Société Générale Bank from France, they do a lot of ESG commitments and updates on a quarterly basis. And then before they do this, they need to understand, what are the other banks committed to? What are the money that the other banks put on the table? What are the practices or methodologies that their competitors use before they can commit to their own different ESG targets? They do this by between 80 hours to 120 hour cycle to update each topic every year. With our tool, the hours that they spend are down to 2 hours now because of the automation and then the market intelligence that our algorithm can provide. What's different between us is that we actually come from a sustainability domain background instead of a AI or a financial industry background, where we actually come from a very deep understanding of what is really needed by people who work in the sustainability area, meaning that we understand the two biggest pain point of them is, first, they need verified source before they come to a conclusion. The second is that they need to be able to understand that there's no hallucination in the answer. So this is basically the focusing point. And then we also have our own ESG taxonomy, which has been proven from various past success of our service models over the past few years. So in terms of competition, the ESG accessibility solution market is getting pretty hot this year. What we're different is that we focus on this contextual analysis of ESG research instead of just numbers. There's a lot of tools on the market that basically tells you, tell me what is the scope 3 emission of a company, and they just give you a number. But without understanding, how do they calculate the scope 3 emission? What are the references they use? What are the breakdowns? How do the reference breakdowns? These numbers are just meaningless, and that's the root cause of a lot of greenwashing, acquisitions. So we really help people to understand the context behind numbers, so that we can provide them a very quick and easy way to get to a scientific conclusion and insights. Arboretica falls into a category where we call external intelligence. Basically, that our tool and analysis helps you understand how do you compare with others on your ESG journey. Most of the current solutions—
30-second warning.
Thank you. Most of the solutions focus on the internal intelligence, basically help you understand, how do you do on your own emission reduction journey. And we're targeting a market of basically the global public companies and research institutions. So currently, our product has a signed contract with Société Générale, has several pilots running, and a lot of pilots and leads coming up.
And time is up. What are you looking for?
Thank you. So very quickly, the last point. So we are looking for a pre-seed round funding of 550,000 euros. We do have revenue. So this pre-seed ask plus our revenue can give us a 2-year runway with our current business plan.
Awesome. Very cool. Very cool. Then thanks for sharing. I would say you want to kick things off, Carl?
Still have to come up with some questions for now. So give me half a minute and I'll get David a go.
James, a hard thing you're doing, which is going from consultancy to software company. I'm sure you are aware lots of people die in that valley, right? So 2 questions. Number 1, what made you be like, we're done as a consultancy business, we're all in on building software? Some tipping point that you had. And then number 2, who's actually doing the software development? Because that's the thing that I find hardest and question is, guys, you're running an agency and you're really good at it. Number 1, why stop when you could have a good business that way? And then number 2, who there is actually going to build the software?
Yeah, great question. So first of all, I don't think we're ditching completely the consultancy business model at this point. The reason is because this industry needs a lot of education from our first-hand experience, that people need to first understand what is the value of, let's say, machine learning or AI in the first place, and then adapt to this new ways of working. We talked to, let's say, UN people, and then they were like, nobody trusts machine results in our organization. Like we can't really work on any technology-driven stuff. and we basically have to do like a baby step, through small consulting project until they can adopt your tool at this point. So this is kind of the path that we chose. The reason why we chose to do a software a platform is because we've seen enough recurring problems from our products where, I say the biggest, the most common use case that we hear is that, I want to know for these 200 companies on my list, I want to know how many of them are actually doing, let's say, scope 2 emission targeting, and then what do they actually do? It can be done by a project. It can be pretty much automated universally for different clients in this way. And then the reason why we believe we're at a good transition to a software business model is because our previous products were all built based on a core algorithm that developed. It's not like pure, like a traditional consultancy. We actually have a core algorithm set which we created that leads to the software. So we have the backend built already at this moment. And then we are basically hiring, Eastern European developers for the front end, which so far has been working out in a very cheap way. So that's kind of where we're at.
Talk to me about your buyer, right? I know coming out of like New York Climate Week here in the States, it was ESG is a little bit of a down term,
Yep.
hard to find funding for. Hey, Starbucks has laid off half of their ESG team because it's just baked into the business. It's a little bit like being a vice president of social media 10 years ago. That's not a job anymore, right?
Yeah.
You're just in marketing. So talk to me about your buyer. What's their title? Do they have the paycheck and the bank account to afford this? How are you thinking about that?
Yes. We target both policymakers and corporates. So that's a big, I guess, a unique point between us versus other tech solutions. So for the corporate users, our previously decision makers are mostly, let's say, ESG head or chief sustainability officers. We are running a pilot with Philip Morris in Switzerland. Basically, the decision comes from their CSO. Their CSO says that we have a need for some automation pilots. So let's kind of give it a go ahead. Our first contact was one of their analysts, but then it just go up. So then the story with Social and How is that we work with their VP of sustainability intelligence in their retail banking unit. In their wholesale banking unit. So it is a very top-down approach from our sales pipeline. For the policymakers, we mostly work with basically NGOs that has a direct policymaking influence, like WWF, like UN, like the Nature Conservancy, where we mostly work with their, let's say, program directors. For example, their global head of policy with WWF, or the Nature Conservancy's tech lead, something like this. So it is a very policy-driven, like top-down industry, and that's where we're targeting at this point.
Right. We've seen some big logos on your deck, and I imagine for those kind of companies that you've listed, there's a recurring need for your technology. But on a sales perspective, also, what's the lock-in effect that you're proposing? Like, once I've licensed my ESG report, when is the next time that I'm going to need your product?
Yeah, very good point. We're still in the transition period between most of the revenue come from services to revenue come from the SaaS business model. From the product side, it depends on the reporting cycle of companies. Or put it this way, we see two types of needs from our customers so far. The first, they have a hard, like let's say a legal requirement where they have to report on their different ESG commitments. That's either once a year in most North American companies, or once a quarter in some of the European companies. Like France is being most progressive from our experience. And in that case, basically, whenever they need to update their own commitment or sectoral policy on different things, they have to do this, benchmarking analysis once, report this the competitors' practice to their management, to their corporate communication team, and then update their own commitments. So that's like 2-3 week cycle per topic. So that's one side. And then the other type of need is that Association Hall, for example, our first customer, they really see ESG market intelligence as a way to build their own like corporate competitive edge against their competitions. So with them, it's really embedded in their daily operations. So that they basically use our tool every 2 weeks. Basically update their management team on different competition updates on different topics, and then their topics that they analyze is really detailed. For example, they not only analyze net zero or nature-based solution, these hot topics. They also analyze topics such as soil artificialization. Like this is a very niche topic that they basically try to make sure that they use ESG as a competitive advantage against their banking competitors. So based on the different needs, there's a different user frequency or stickiness to this solution.
All right. One more question from my side. Sorry, it's a totally different topic, but in the second product you pitched, I forgot the name right now. Sorry about that. Chat Net Zero. Okay. You propose it as kind of like a way to chat with your data, just like ChatGPT, and doesn't give hallucinations, which is a big hurdle to overcome actually with a lot of models being built on ChatGPT. How do you do it?
Yes, it's a very new thing that we developed in partnership with a university in the US actually. The story comes from, if you talk to people who work in the climate change field, actually very few of them use ChatGPT for two reasons. The first is that they can't trace the source of the answer, which is a very big issue. The second is that it hallucinates, like everyone knows. So then what we did is that, previously we worked on a project with the Net Zero Tracker, which has now become the biggest Net Zero data set of the world. It's a public project, free access, everyone have access to it. So then we built a model on top that we first will mandate the answer only come from the data and the reports pre-selected by the tracker product. So we have a list of verified source. So that's the first pain point. The second is that the algorithm that we created on top is, so first we pre-engineer the data. So when user asks a question, we'll break the question down. We'll then pre-select relevant information from the list of source data, engineer in a way that can reduce the wrong answer in the ChatGPT. We'll send it to a large language model, third-party large language model endpoint. And then when the answer comes back, we will break the answer from the large language model and then do a check one by one against the source. So if the check matches, we attach a reference to it. If it doesn't match, then we drop the answer. And then we
How much effort does that take, though?
You mean the development time or the?
No, I mean if you're doing all of these checks, are these manual or?
Yeah, it's automatic. Actually, you can try it at chatnetzero.com. Do you mind if I show it to you guys?
Yeah, go for it.
Yes. It's free, so everyone can try it. And then, so this is a simple question that we always use. For example, if entity relies on fossil fuel, does that mean it's not pledging net zero credibly? So it's a question about definition of greenwashing. And then on average, your answer takes about 25 to 30 seconds, which is much slower than ChatGPT because of the hallucination check. As expected, I guess.
Yeah.
And then, so then you see so the answer is in sentences, and every sentence will give you a reference. So if you click the reference, it will go to the actual page where the sentence come from. And then this is basically the kind of the daily research experience of people in this field, that they need to have insight on one side of the screen and the reference on the other side of the screen to make sure that the information are correct. And then basically all these sentences you see here are after the hallucination check. So the wrong sentences are dropped already by the algorithm. So that's kind of the infrastructure that we built. And then we realized after we built it is that we tested it a few times that as long as the document that you upload in the backend are considered truthful, the answer from the machine is always truthful to the backend document with reference attached. So technically, we can not only work on net zero documents, but basically all type of climate documents, and then make it let's say the ChatGPT for climate that doesn't lie. Let's put it this way. So that's kind of the story of this. And then right now we're in touch with Google. They came to us afterwards with WRI, with the Nature Conservancy, and the Climate Arc, which is a large UK foundation for climate change. And then basically they're discussing kind of customized use case based on this infrastructure for them at this point. But because we just launched last month, so we're still in the early phase of this product.
Cool, very nice.
What's the biggest challenge you're having right now?
Right.
It seems like all the wins are at your back.
Let's say there are three potential challenges that I see or I experience at this point. The first is like David said, the transition between the consultancy to software team is definitely, we are learning a lot, in our way. And then so far we have no fundraising, so everything comes from our own investment and revenue from our services. So it's really, we learn on the way. So that's one. The second is that this industry, at least the people that we work with, the clients, like I said, they need a lot of education in terms of using technology in their daily work. I wouldn't say it's a problem of the technology. It's really a problem of, let's say, work style. Asking someone who has been using hand calculation for life and now switch computer is difficult. It's really a lot of things that we build really focus on create the best usability so that people don't have to learn anything to get onto this new ways of working, which make them faster. So that's a lot of education work is needed. And the third is that I do think these generative AI tsunami this year has accelerated things a bit, accelerated things actually a lot from what we experienced. I believe we are one of the early ones that try to dedicate this machine learning AI to, climate analysis, sustainability analysis. We developed our own algorithm, natural language processing algorithm, way before the Gen AI, trend happens. But we're still one of the early ones, I believe. But if we don't act fast enough, then that's probably the biggest reason why we would fail in the future if we're not. I think there's a room for a AI-driven platform for this. If it's not us, it's going to be someone else. So I think the speed is also a matter here.
Why is it going to be you?
Because we have a lot of domain expertise and industry relationship proven from our past years of engagement. And then I do think that there's two pillars, the domain knowledge and the AI technology, that you can't really miss a pillar to be successful in this. And then most of the, let's say, participants in this race we've seen really lack the domain knowledge. That's what I see so far.
What do you think, folks? Any last questions?
Hey, James, all I would say is that as a venture investor, right, I don't want to invest in a consultancy, or I would be another type of investor. I want to invest in software that scales. So there's some point, and I get you're not there, and we've invested in things that are at the transition between consultancy and software company. But at some point, you're done, and we are a pure software company. And then, we do an A round, a B round, and then we add a consultancy, and then somebody buys you, and the first thing they do is get rid of the consultants, right? That's kind of the model in the industry, right? So as long as there's an inflection point coming where, yes, you maybe have a couple of folks who help with installs and onboarding and customer success, and maybe they're secretly consultants and you just call them customer success. Just know that that's going to be very important to people that you're out seeking money from, is that, okay, this is a pure software company that I can get a software multiple on and not an agency multiple.
Got it. Can I ask a follow-up question on this?
Sure.
So we understand this point. I guess a personal question from me is, let's say Salesforce, I guess one of the biggest SaaS business model, their consultancy arm is as big as their software arm in the organization. And then how does
their software sucks? And because people are stuck with Salesforce and can't get rid of it. It's not because it's Salesforce. That's a good model.
Yeah. So I guess my question is, does that mean Salesforce is not an investable business model in that sense?
Now, Matt, I won't agree with you 100%, but I hear what you're saying. I would say, James, but that's because it's Salesforce. And so, yes, I hope you get as big as Oracle or Salesforce, and then you can have all the consultants in the world that you want and have an IPO and not worry about it. But at the smaller level of investability and who buys you and what the multiple is, it's software. And again, yes, you can have some customer success people, you can have some consultancies, but if a PwC Digital buys your consultancy, that's very different than Salesforce acquiring you guys.
Mm-hmm. Understood.
You have to be big enough so that people have to use you. And then once they have to use you, you can make your software suck. Yeah. And then they have to hire your consultants to use the crappy software.
All right.
Anything else, folks?
Thank you very much, James.
Thank you very much. Appreciate it.
Awesome, James. Then thanks so much for presenting. Let's keep things moving on. And if you guys haven't already, so Climate Techies, you can check it out. We've got sector-focused networking calls as well as local city meetups, New York, Singapore, London, Paris, Hong Kong, Dubai, about to launch Munich, about a dozen cities, soon to be about 2 dozen. and about 15 sectors if you're looking to connect to network with the most relevant folks in your space, from energy to mobility to food and ag, carbon capture, whatever it happens to be. We've got a meetup, we've got networking, we've got climate VC databases solutions, we've got everything for you guys. Check it out, climatetechies.com. You can try the trial and hopefully help support us so we can keep doing this and helping these companies. Now we've got our next company of the night up, Martin. Martin, are you ready to rock and roll?
Yeah, I'm here. Thanks for the opportunity, and thanks for all the great pitches. I'll do my best.
I think you should be okay from what I hear.
Thanks so much. Do you see my slides now?
Looking good. Take it away. What's the future of EVs and charging?
All right, so we're Elby. I'm residing at elby.co. It's a scalable way to fix EV charging for cities in an environment typical as you see here, where you have multi-story buildings, a sidewalk, and then curbside parking. Most European cities have a lot of infrastructure that looks exactly like this. And of course, the shortest way to get power to the car from the building is what we specialize in. So a fairly experienced team. I'm the co-founder of Issue, one of the biggest publishing platforms online. Also did a company called Conference that I exited a few years ago. I've worked with Michael and known him for 10 years. He's very rare. He's a PhD, does electronics, deep tech, AI, front end and back end. So he used to be the CTO and co-founder of cultivated that just raised a nice round. He also built a self-healing chip with NASA's Jet Propulsion Lab. And our third founder is Lars, who's been an architect for 20 years, specializing in low energy housing and the whole green transition. He's also an industrial designer, so knows a lot about city and how they operate. As we know, the cars are coming, the EVs are coming. By 2030, especially in cities, most cars will be EVs. If not the market, then regulation will make that happen. It's a massive market, but it also means that we need to power 20 to 40 times more EVs than we are doing today, and we're not doing really well. And the reason is that charging stands or the smaller posts, as you see here, they're super slow and expensive to deploy. They demand a lot of space in the city, especially on the sidewalk, which is already stressed in the city. And they also require public tendering because the city is actively bidding out public space. So that's like a super slow way to go. And what we propose is just simply use the existing infrastructure and power supply. So whereas the charger, it's actually there in the picture. The charger sits inside the wall, nicely protected, doesn't interfere with the public space. And then there's a nice little sleeve milled into the sidewalk that holds the cable in place. It works with 1, 2, and 3 phases, or any car that you care to charge. And there's no permanent power in the sidewalk, which is super important, because otherwise it would need to be dug down, and you need to do a lot of things that will significantly increase the price and the deployment time. So where you use your own cable as the car owner, you connect to the wall charger, then in 10, 20 seconds, you sort of just tap down with your foot the cable, and these 2 sleeves hold on to the cable. There's a video on our site if you care to see how that works. Super easy and actually kind of fun. And then you just start charging. This solves the problem. We put the chargers where the cars are already parked 95% of the time, which is at home or outside the office. Since there's virtually almost no hardware, and it's so fast to deploy, it's really a significant improvement in terms of cost and deployment speed. You also don't need the tendering because we're not interfering as much with the public space. It's also and of course, then the charging becomes cheaper. This will be the cheapest power in the city. We also share revenue with the building owners, which is unheard of. Again, we can do this because it's a lot cheaper, and we do this for stickiness and, of course, also competition, and also a way for the cars to pay back to the 90% of the people in the city that have no car. And of course, these are also the people that needs to approve of this in the building. we sell it. Sorry, here we go.
1 minute warning.
1 minute, okay. Yeah, so I'm going to fast forward a little bit. We sell it and give it away for free, depending on the model. It's completely unique in the market. Right now, we need to find that scalable model where price is going down, we install faster and faster, and the usage is going up. We already launched and are organically adopting new buildings just from the site, and now we are looking at manufacturing and inventory. Everything will be outsourced, and also looking at integrating with more cities. We're raising the first round. It'll take us 2 years into the future. The product is tested and already operational. And from there, we can actually, with the collateral that we install, start looking at debt financing as well as EU grants. EU is really pushing to fix this. And then for the future, there's some really interesting
Time
things
is
going on.
up.
All right, that was my last slide. So solar to car, vehicle to grid, and also live monitoring of parking spaces. And I'm at Martin at Elby.co.
There's a ton of competition in the space. Why are you guys going to make it?
Well, I'm going to stop the share. This is from whichever perspective you look at. It's the simplest way of getting power to the car where it's already parked. We are at our third round at the EU Patent Office, where we've looked at hundreds of solutions. We have found nothing similar to this, so we actually think there's a chance that we might actually get a patent going for this, a very narrow patent that specializes for this specific use case. So we haven't seen anything like this. If you look at cities like Oslo is probably the most sort of adopted city. It's a big mess with all these big charging stands going on in the city. So people actually charge at home. So there is really nothing that's so lightweight in terms of hardware. And also with the revenue share, which is completely unheard of in this market. So that's just so it's a combination of all these different things that I think it makes us completely unique.
Pretty sure I've heard of people doing the revenue share thing. When I say pretty sure, I'm very sure. But how have you managed to gain the traction you've gotten so far?
Well, I think it's just a simple and it's a nice product. It's a product for the citizens. We're not a big energy company. It's kind of a cute brand and it pays back and it's simple. People, they see it and say, "Huh, why didn't I think of that before?" Right? That's also the sort of the initial reaction we had when Lars, one of our founders, he came with the idea for the first time. It seems simple. It's kind of a no-brainer. But it does take quite a lot of different skill sets to make it happen, right? But we are, I guess, software people, and this is the money we're raising and the way we are scaling it is software-esque. So, like I talked about, with we have two different models. One for professional buildings where they actually pay for the charger, and they may make up to 60% revenue back, depending on the volume that's being charged. But that actually pays for the other charger that we give away for free. So in terms of the exposure, it's virtually no exposure as long as we can keep the customer coming. And as you probably know, when we're talking about infrastructure, the typical financial scenarios is like 25 to 40 years. So we make the charger with installation back in probably a year. The customer, when they buy, they will make it back probably in 2 years. And then it's just upside, right? So it's really a product that's built for scale, just sort of land grab, putting all those plugs in the wall. So within a year we could solve like an entire city, such as Copenhagen, where we operate from, or Stockholm. Stockholm just announced from 2025 they will not allow ICE cars to come into the city. I have no idea how they're going to charge all these new EVs, but you need something completely different, and charging station or charging islands or the singular charging stands, putting one of those in is like a 3 to 6 months process with the city tendering, right? We can put in one charger in roughly an hour. Of course, we need to alert the city, and we also need the electrician to come by the day after and then plug it into the basement. But we're talking hours and not months, so it's a completely different animal from what we're seeing in the market.
Hey, Martin, so talk to me. I own the building. I think this is a good idea. I'm going to have one or two of these, or I'm going to have five of these on the side of my building, or because I think, okay, great. I like it. It's good, but like, okay, breakers, new electrical box. Okay, I haven't, gosh, my building's from, 1700 in Copenhagen or whatever it is. So just talk to me how you kind of talk building owners into this.
Yeah, so the customer is the building owner or someone administrating the building. It can be like a company. Sometimes it's more like a board if it's a collectively owned building, which is big in Scandinavia. They go to us and just put in their details, and we send them a contract where they sign. Then we do everything with the city. So for the city, it's only what happens on the sidewalk, which is this small groove. It's like 2 centimeters by 2 centimeters, which is significantly less than any other types of changes that they do in the city. For instance, rainwater going through the sidewalk is a minimal, and you can just roll over it with your bike or your wheelchair, whatever. Sure. So that's minimal, right? So then we do everything. So we work with a third party doing all the sort of heavy lifting, the construction, and not from the get-go, but that's the model as we move ahead. They will do the milling, do a cup drill into the wall. Typically, it's a 2-layer wall, so it's just the outer layer. That's where the plug goes. And then all of the electronics is safely secure inside the basement in a separate little closet, basically. And then the electrician, he will put up a separate meter next to the existing meter that's already in the basement, controlling the lights, or if there's like a laundry or something like that. So we separate the bill and we cover the bill. And when this is approved, and we just put it into the app on the map, and then you start charging. So it's a fairly lean process. But of course, if it's a super old building, there might be some electrical work needed. But typically, and this is the good thing about multi-user buildings, is that there is a lot of surplus of power. So, and this is because all the tenants, they need to be able to cook the Christmas dinner, right? So that's the capacity in the building. But of course, 99% of the time, that's not being used. So we have a voltmeter sitting in the relay that is looking at how much is let's say this is the capacity and this is what is being used. Then everything else is what we can use to charge, right? And then we just show what's the price going on through the day, and people, they charge during the night when no one is using it, or during the day when everyone's at work and the power is cheap. That's when you want to basically charge a car, right?
And you're designing and building your own hardware, or using off-the-shelf charging components? Because I guess if I wanted to put you in a box, am I putting you in a software mostly box, but yes, we contract to do installs, or are you in both of those boxes?
Yeah, so we wanted everything to be off the shelf, but the sleeve in particular does not exist until we invented it. That's part of the patent. And then also the wall case that fits with a standardized cup drill. We also designed that, and right now it's being 3D printed, but we're moving into industrial production, outsource, of course. But everything else is just off the shelf. You can get these electrical components from basically anywhere, and the cost is just going down, 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 because it's not rocket science, right? But
and then my last question: how are you thinking about batteries, BESS? Is there some sort of way to integrate that, not integrate that in the system? You're obviously going for a minimization of space taken, but how are you kind of thinking about batteries when it comes into your solution?
I think these types of buildings, they will become more like their own power plants. We are seeing a lot of solar roofs that will have probably batteries as well. We already have people requesting Elby as part of the building if it has its own power production. And of course, if you can just take the power directly from the roof to the car, the payback time of the solar installation will just diminish like drastically. So I think that this will work with batteries, solar roof, low energy, like water heating, heat pumps, and all that. The building will just be more and more like small power plants, basically. So we see us as a really good part of that mix.
All right. Martin, also from my side, not owning an EV, but sometimes having the pain of searching for those stations to plug into and to also buy for. In my experience, there's somewhere to put your card in or put your card at, to pay also for the process. Is that also hardware that you guys have to install, or is it only the plug?
It's just the plug. There's a little antenna in there. So the app will just use GPS to position you next to the charger, and there's a little icon. You click it, and then as long as you're signed up, which takes like less than a minute, you just need to put your basic credentials and your credit card in there. Then you can start charging. It's completely public, not just for the people in the building on the street, but down the road we'll of course through API work with the more sort of general platforms if you are coming from a different city or something. So it's completely open.
Okay, one more question from my side. We've talked a lot about scalability. So actually, you're raising a round now. This is going to last you 24 months, if I've seen correctly. Doesn't take you to operative profitability, or does it? Or what's your way to there?
No, it doesn't. We are gonna sort of it's gonna be a fairly small team, just 6 people. So we want to learn what every single step of the process is before we raise a bigger round and scale. Like I talked about, we're really interested in debt financing. There are some good interesting instruments here in Scandinavia where the government is just giving you a nice loan basically, and you can do that with the collateral in the charger that we are installing, and they will generate revenue enough to pay back the interest. Of course, we're also looking at raising a bigger series seed/series A, depending on how you look at it. But the way we've made the business model with the revenue share is that it's a long game, right? It's small numbers in terms of the revenue per charger, but big scale in terms of the number of chargers. And we do this to own the market. I mean, you could have flipped it and say this is super expensive. We want profitability a lot earlier, but then we're not going to become the big player, right? Anyone is looking for this massive market grab play. And this is also good for the climate, because right now we're in a situation where by 2023-24 you will have price parity where the ICE car and the EV is on par. But if the infrastructure is not there, people are not going to adopt the EV if they live in the city with multi-story apartments, right? So we need to have abundance of charging to solve the range anxiety, right? So this is why we decided to go with a sort of a mass scale broad adoption business model.
Also one thing, I know the time might have not lasted for that, but that's also a calculation I would have loved to see is when does one unit of your chargers become profitable, also with the revenue shares, with you installing it, with all the costs, and how does this compare to standardized methods that we use now?
The answer is like 1 to 2 years, if you look at compare that with a charging stand, that's like 15 to 20 times more expensive, and of course you need to put that overhead into the cost of charging. Our overhead is like so much smaller, and this is also not good for the adoption and the consumers, right? So a cheaper product is just better for everyone, and also having it everywhere. So you get rid of the lines and people. Right now, there's so many people driving around trying to not just find parking, but also find parking with charging, right? So the only solution for that is having this almost ubiquitous charger where every second parking lot has a free charger, right? So that's the scenario we want to see happen, right?
Pretty much. Looks like we got interesting solution. Lots of interesting solutions really to make it happen. Hopefully we make it happen faster rather than slower, and it's not only on Tesla standard because we can't trust Elon anymore, but that's a whole nother can of worms. So thanks so much for presenting, Martin. Thanks, I would say let's keep things moving so we keep on pace. Evgeny, you want to share a little bit more? I'm blanking right now on what you guys are focused on. Not Newform. That's the other company.
Oh, sure. Here we go.
Green
Hi
Growth.
everyone. Yeah. Hi everyone. I'm Evgeny from Green Growth, and we're gonna change the way farmers use data from machinery and apply it to save money on fertilizer and seeds. Basically, the farming process is the yearly process. So they have huge lands, they have a lot of machines to operate on these lands, and they use these machines to prepare the soil, to put seeds inside the soil, to put chemicals, spend a lot of money. And in the end of the season, they harvest, right? So that's what you can see on the picture. And the thing is, after all analytics you get before harvesting, you want to see what is the final data after we harvest. And that's what actually we do. So we get data from the combines and we show to farmers the insights. And before I go to the product, I want to share that we already have pretty much 3 different types of clients. We have small farmers, medium farmers, and huge farmers, which some of them you can find in Europe, some of them you can find in Asia or Latin America. Basically, we operate in 6-7 countries at the moment. So the market is huge. Like 11% of the full land, of the Earth land, is covered by crop fields, and these crop fields are covered by the machines, which are constantly updated by the sensors. And all the processes, they need to be optimized. And now there is a problem. So there are solutions. There are solutions which can be found inside the machines, or there are solutions you can buy from somewhere, but farmers don't buy it, even though they want to buy it, they need this data because it's too complicated and too complex to use, too expensive. So what we've done, we brought our experience. I'm not a farmer. I came from B2C and physics. So we brought our experience from out there to farming, and we are trying to create great products to gather the data. And in the same time, we help crop growers to save on fertilizer, which is the main source of carbon. And basically saving on fertilizer, you save on the carbon as well. And this is the product, going from right to left. From left to right. So we're selling devices which look like this to be installed inside combine harvesters at the moment and in the tractors a bit later. We can target old combines, new combines. We can bring all the different models together into our system. And without asking crop grower to press any buttons to install any screens, we show them the final result, the final analytics about the farm. And we show them how to use this analytics to actually apply less fertilizer. We charge for the hardware, which we do in-house by ourselves. We have huge margin from this hardware, and additionally, we charge recurring revenue for the software. Just an example of what farmers do with our data. So on the left, you can see the farmer bought our sensors. He got the data from his farm, and you can see he found bad areas on the field, like low yield. So he actually grew less on this part of the field. Then in the middle of the season, he went and did some experiments with chemicals, with some practices. And next year, you can see he actually grew more food on the same area. And if you apply this for the full, like all the fields, you can actually grow more food from the same amount of fields. So we started to play around last year. We started to test the product. We got some revenue. This year, we started to test the business model where we sell through the dealers. It works. We covered, as I mentioned, 6 countries. And with these dealers, we want to grow more next year. And we know how. We have letters of intent.
1 minute warning.
Dealership agreements. So we basically know where and how to grow. And the market is huge. As I mentioned, we target not only combines, but all of the machinery. And later I will tell you why. But about the competition, so basically we compete, I would say, with big guys like John Deere, Class, so guys who manufacture machines. But we actually want to partner with them. And we already are in talks with some of the companies. And we want to share our data to bring all combines online and to share revenue with these big guys. The strategy is not to be the software where we want to bring customers, but to be the backend of the data gathering. Because we understand that in different parts of the world, farmers use different softwares. And we want to be the solution farmers install on our machines and share the data with this front end, the software. So we want to charge businesses, not the farmers conventionally. We have team-based combined business and technology, and we are raising 1 million euro equivalent to expand the product and sales for the next year. And this is it.
Awesome. Thanks. Didn't mean to replace you. I meant to add myself. Ag tech is notoriously challenging to scale. Farmers are notoriously skeptical about anything that will help them sell more. And in general, it's a really, really hard and slow marketing grind where if they get it wrong one season, they may be out of business forever. How do you solve that?
Yeah, that's the true problem. But the point is, what we found out when we started, that the data from combines is mandatory. So there is no problem of selling like the product. Everybody knows that they need this product. But before us, they had barriers like money barriers, technology barriers. And now it's like super easy. It's not that expensive. They can spend the money. They can see the result. So basically, we don't need to push the product. We just need to make the product affordable enough, and people just buy it. So we don't actually explain why. They see the product, they see the price, and they just buy it.
Talk to me on the 3 customers that you have right now, the medium scale and the large scale folks. How'd you find them, and you know, what was their main reason for buying?
Right. So for like most of all, we found using our dealers. So in different countries, we have medium companies which have their own network and we sell to them with a discount, and then they sell to farmers. So for a small farmer, we actually we give them data, like precision data about every single field on the farm. We tell them how to apply fertilizer, how to get the data about the experiments they got on the field, and so on and so forth. But for the big farmers, like in Asia, Latin America, US, somewhere, so they have employees who drive the machines. And and the problem of the manager is to control the machine, like to see what's going on the fields right now at the moment, about precision agriculture as well. And current solutions don't offer that because they are sort of concentrated around small farmers. So we need to have all the screens inside the machine. And we do like online managing software where the manager inside the office can sit with a laptop or like mobile phone in the future and see what's going on the farm. So we do this basically analytics about the efficiency.
Talk to me on, so the combine's out collecting this data. That's what, once a month, once a quarter? I mean, in my mind, you plow, you plant, it grows, and then you harvest. So talk to me about like the ongoing data stream to actually get to where fertilizer should be placed for precision agriculture. Because it seems like you're not out there enough and you don't have hardware deployed permanently in the site to do that. So what's kind of your magic there?
Right. So they use our data. So they collect the data from combines once a year. At some countries, twice a year. So when they have 2 seasons. For 3-4 months a year, you harvest. Then you get the data. And like right away, you plant. So right away, you convert our maps to prescription maps. And then you plant or fertilize using these maps. And then you fertilize once more somewhere in the middle of the season. And then you use satellite data combined with our data, so like, more or less. So there are like 2 ways we widen the time frame where we get the data, right? So the first way is to get more spatial. So for example, the season starts in south of Europe, then north of Europe, then Asia, then Latin America, and then you just go over the globe with different clients. And the second, we want to target tractors as well, right? So you install the box in the combine, you have the layer of the data. Then you install the same box into the tractor, and you have another layer of the data, right? And then you get from like tillage, seed map, spray map, harvesting map, and then you just can combine it together and play around with analytics and see what's going on. So I want to cover all this cycle. And
last question on my end. I assume takes a certain sophistication of farmer to pull the lever on this. So is that reducing your market? And that's fine because you only want to, you said somebody who's in a project management office looking at fields and fields of data, which is obviously maybe not the average farmer that we think of. So just talk to me about your market segmentation.
Right. Well, so we have different ways to approach the farmer. Our preferable way is to go through partners. So we are not agronomists, so we are software developers who develop analytics, and they are agronomic software. So, and they have hundreds of thousands of clients everywhere. So we partner with them, and basically we sell our data to them, and then they resell the results to farmers. So we want to be the purely B2B to sell to these guys. But when we sell directly to farmers, which is mostly right now, so the B2B is the strategy, but we make money right now selling directly to farmer. So the point is, we made the product so simple, you don't need to have any technological investment. So imagine you are the client, you want to, you saw the Instagram ad, you've seen these nice pictures and you want to explore, what's going on? You are calling salespeople, you pay the bill, somebody comes on the background, installs the device, it's hidden. And then you have the web application, just open it, click one button, and you have these maps, and that's it. So you don't need to, so we have clients from 20 years old to 60 years old people. It works really, really easy for
them. Also, one question I have, just to gain a better understanding of who you're competing against. The agricultural machinery that I know, really expensive ones also there on the market, they're basically data machines, right? So there's a million data points you can collect there simultaneously while you're driving on the field. From a farmer's perspective, is it I buy your product to save money, but I can also gather these data points with expensive machinery, or is it that your data is actually exclusively gathered through your hardware?
You can get this data from the expensive machinery. Moreover, we can connect to this machinery and we can get the data from the sensors from the factory to our system. And we already have a couple of clients who decided to shift from the software from the manufacturer to our software because it's easier to use and they like the support and all kind of stuff. But the point is, they are new machines. For example, you can buy John Deere for $1 million, right? And you will have this one machine, but you need to have at least 5. So you spend 5 million, no way. So you have 3 old machines, 2 new machines, but you need to collect all together, and it's impossible. If you have 2 John Deeres, 3 Case New Holland, that's over. You need to have some medium solution. So there are some farms in Iowa, for example, technological farming state, and farmers, they have all John Deeres. It's impossible to sell to them, but it's small percentage. And about the competition, I would say there is the example on the market called Climate Field View, more or less same solution, nice exit example. So the guy from Google developed this software and sold to a chemical company for $1 billion. So basically, we see that it can work. We see them as the sort of competition, but the market is huge and we develop very fast. So we want to sort of be better.
All right, I understand. Thanks. So one more question also. I think to operate one field of corn, for example, I believe over the time span of a year, I would need maybe 3 different kinds of machinery, right? So would it be possible, so what does the installment process actually for one type of machinery look like? Can I just take it out and place it in another machine that I'm needing today, or is it permanently installed throughout the year?
Exactly. You can plug it in. In machines, you have this connectors. So we just plug it in. If we have the protocols deciphered, we can get the data from the machinery. And then, by the way, about if you have just one farm, you don't have a machine at all. It's in Europe, it's really popular, for example, when they are contractors. So guys who have the combine, but they don't have the fields, and they harvest the fields of other people. And we actually have these clients. So we sell them our software, they collect the data, and then they resell the data to the farmer. So they actually do the job for us, but they resell it like really expensive. So basically they harvest the field, they show our mobile phone with the like preliminary map, and they're like 300 euros. Will you buy it? And they're like, okay. And then they ask us for the file, and we send the file, and and you are the farmer with one field, you spend 300 euros, and you have this like analytics about the field.
I understand. Thanks.
And you said they have to do all of this reporting because of certain laws and regulations is why they're starting to get more involved, because there are a lot of solutions for monitoring fertilizer use or different conditions or different, basically anything. And the uptake is very, very challenging for those because it's not something they have to do and it might cost them more. And using less fertilizer is much better for the world. But if it means that my harvest might end up getting screwed accidentally, well, then screw the world. I have to make sure I feed my family. Seems to be what happens a lot with farming.
That's the point. That's why people don't trust satellite data so much, because there is a like error, wheat, color of the field, clouds, all kind of stuff. So the only way is to combine satellite data with ground-based data, our data. So we sell our data to the guys who sell our data, and only then you can create the trustworthy solution for the farmer who will be able to use it. This is the first one, and you are absolutely right. So government pushes like there is a limit of like average fertilization you can do, right? And you don't want to like to lower your fertilization. You want to make it more somewhere and less somewhere, and for that you need this map. And that's very important.
Awesome. Any last questions, Carl, David?
I'm good. Thank you very much, Evgeny.
Thank you, guys.
Evgeny, thank you. And now we would kick things over to our last company of the night, New Form Foods and Taz. Taz, you want to share a little bit more about how you guys are trying to change the future of food?
Absolutely. So sharing my screen. So I'm Tasneem Karodia. I'm co-founder and COO at New Form Foods. We're working on scalable cultivated meat technology that hopefully can shift the industry into the cultivated meat space much quicker and cheaper than what they're currently able to do. I stopped eating meat when I was 16, primarily for environmental reasons. I think that shift 16 years ago has really moved me more into the food space, thinking a lot more about the food system as a whole, its inefficiencies, and really then how do we actually make sustainable changes. I found this technology 4 to 5 years ago after doing a lot of research and got really excited to move into the space. I think one thing now where the industry is, we're only 10 years old, and I think the big thing is that a lot of this industry started in pharma grade technology, looking at vaccines and cancer research and a lot of very expensive technology. So for the industry to scale, I think we need to really fundamentally look at the picture behind us and think about how do we do this a bit better. So what we're looking at is how do we move everyone into a space that is more like a brewing industry rather than the industry that's set up for vaccines that are higher margin and more expensive. Some of you may know this, but the first burger that was made in 2013 cost $300,000. We're trying to avoid this. We're trying to make more scalable technology that can get onto the plates of all consumers at price parity. At New Form Foods, we're making the same delicious meat. We're just looking to do it at a more cost-effective rate, as well as getting it onto the shelves much quicker than anyone else. So in terms of our innovation, for those that don't know what cultivated meat is, it's still nature identical to meat. We take biopsies from donor animals, we grow them in an initial media, and that's probably where the biggest input cost is at the moment, that media cost of getting it down. They're grown then in 3D suspension, much like what you'd see in a brewery, and at the end of that, you get the same product. We're working on hybrid products because we think that's the first route to market. In terms of currently our technology, what we're really aiming to do is really reduce the CapEx cost. 10 times cheaper than what you can get globally, and then as well as speeding up that process, so really getting to market 3 times quicker. We've done a lot of things ourselves, so we've done a lot of customization, really working on the efficacy of bioreactor operations. We do a lot of 3D printing and really aim to move very agilely through this process. And we're thinking a lot more about what is the design elements needed and what can we actually strip away. So really looking at things like novel sterilization to actually reduce a lot of the capex across the whole system. Our model is a B2B model. One of the main reasons for this is we noticed quite a while ago that the key thing in this industry is that a lot of the food producers and retailers that would ultimately put this on the shelf for their consumers are probably not bought into this yet. So how do we allow them to take less of a risk, but also get into this industry much quicker? So we offer them a market validation, which is a prototype, to enable them to actually do their own market testing, get more people to taste this, because this is where the industry is still lacking, and then move them into a space where they can use our end-to-end technology from cell lines all the way through to bioreactors and build a scalable plant that is much cheaper. Our team is made up of quite a few people, but myself as the co-founder and COO, I've got extensive experience in strategy and business. Brett, my co-founder and CEO, has food marketing, specifically in alternative proteins, so knows exactly how to take this to market and what to do and what not to do. And then Catherine Edward is a head of R&D, and she's got scalable bioprocessing experience, so exactly where we need to be for what we're moving to next is the scalable part. We're looking for $5 million, and that really is to expand our bioproduction platform, grow our team, and accelerate the technology, and then continue to build out what this B2B model would be so that more people are able to move into the space.
Awesome. Great job. Forgot to start the timer, so I think you got it in basically the right time. I'm going to bring the other panelists in. And what stage are you at? Did you mention TRL levels?
I did not, but we're between 4 and 5.
Okay. And how much time and capital do you need to have something that's market ready?
So we have prototypes that have already been tasted, so small scale. So we're still at bench scale. We've got about 100 liters of capacity that, when fully optimized, can do a couple of kilograms. Again, just very small market testing. We've been able to prototype beef and lamb. And to get it to be more market ready, we are looking for the $5 million. So a lot of that will go into a demo plant construction, and that's to really test our end-to-end scalable technology, working on a 1,000-liter system that we've built in-house to really show that we can get the 10x reduction on infrastructure and capex costs.
Guys, who's your first hire? So you get some of this funding, and just talk to me a little bit about that.
So we're building out more of our R&D team. So one of the key things that we're doing, we're quite lean. We're about a 7-person team, 2 people on the business side. The rest of it is on R&D. The key thing that we want to do is build out our bioprocessing team. So we have a few people in the pipeline. And that really is because where the next stage of where we are is we need to work on the scalable side of it. So building out more of the bioreactors. We don't want to hire everyone in-house. We have an external engineering company that we've worked on to build out what a demo plant would look like. And we have engineers that would work on actually building off the bioreactors. So we'll continue to have that externally, but a lot more people to do internal validation and optimization is what we would need.
Everything goes really well. Talk to me about timeline. What does this thing look like in 5 years?
So in 5 years, we expect to have a few customers, and that's from food service and, well, not food retailers and food producers who have actually built at least a 10,000-liter facility that they're able to kind of do their own market validation and testing. So this is in market, in store for a select, obviously at a 10,000-liter, it's probably not producing that much, but probably 10,000 tons essentially that can reach people and consumers and really start getting the pricing down.
Right. Yeah, one question from me also. Lots of respect on what we're doing. I mean, there's exciting way ahead of you, proving that you're 10 times less expensive and 3 times quicker. But I imagine this is a really also research intense process, obviously. So how much funding have you taken on already to this point?
So we've taken on $1 million to date, and we've been going since 2020. One of the main reasons that they may sound low compared to other people is we're in South Africa and there's the lower operational costs. So what we've been able to do has been quite cost effective. I think that's also been one of the main reasons we've kind of shifted our focus. We used to be primarily a B2C company. We've shifted the focus to B2B, primarily because there's a lot of people that have looked at what we've done and asked if we would want to license our technology because it is so cheap and can be more cost competitive. And I think that's been a driving force behind shifting this and trying to actually look at licensing and scaling our technology to others.
Thanks.
What challenges are you having uniquely that are unique to being a South African company in terms of how you grow, scale, and think about fundraising?
So I think a lot of things for us is that there isn't a lot of funding out there for Africa. I would say even if there is, I think we're naturally excluded from certain things. We have a higher risk profile just being here. And I think that means we've had to think a bit creatively. A lot of companies at our stage have probably raised 10 times what we have, but they've still probably hit similar milestones. So what we've had to do is think a bit more creatively about how we optimize the funding that we do get. I think one thing to combat that challenge is that we're also looking at having a UK office, and that also will hopefully diversify the risk. So allowing investors to still invest in what we're doing, a CapEx efficient company, but with less of the capital risk for the investors.
What about risk or challenges you're having on the commercialization side of things, of getting people? You've done some lab tests, you've got some early kind of prototypes. What level do you need to get to for either retailers or food brands to start being interested?
So I think the big thing is having a little bit more scale. I think what we get able to do is a few tastings, small portions. The bigger we can scale, the easier it is for people to see this is something that they can do and take to market. So for us, reaching a just slightly bigger scale will enable us to get more people over the line. I think at the moment, and probably a lot of the people we engage are more South African, so a bit more risk averse. And so for them, thinking about the future when we've just gotten into plant-based makes it a bit difficult. So for us, we're approaching customers that are not just South African. Our first customer was a European. We sold them a prototype. They got to taste cultivated meat for the first time. They got to understand what it was like and then understand how they would potentially take this to market. So we're looking not just at South Africa, but I think the big thing is for a lot of people who are in the food space, one, I think they are under a lot of pressure. So thinking about a future of food product at the moment is a bit of a stretch. So we've just got to overcome that at the moment. And I think that's just having more time.
Okay. David, Carl?
Thank you very much.
Then that's everything. Thanks for pitching. Thanks for pitching, Taz. Thanks for sharing. And now it is time for the last, least important, most fun part of the night, the climate startup of the night. We've got to pick one that we objectively think is, or very subjectively think is, the best company or the top 2 or 3 companies we find most interesting for possible investing or follow-on meetings, etc. And as the volunteers or victims model goes with Zoom, David, your head's out top, so you get to go first.
You want top 2
yeah, pick your top 2, and then we can see if there's a consensus,
overall consensus. For me, I thought green growth was actually interesting because of how specific they were on fertilization and fertilizer. That's obviously a huge thing. There's a lot of people in precision agriculture, so it's hard to kind of get out of the noise. But I like, A, you have actual people who've bought it. B, software people doing software, not other folks floating in and out, right? And then 3, to me, like being fertilizer and usage of fertilizer is going to be so key moving forward for all different markets and all the food we're going to need to grow for people. My other top one is I really like ClimaLinks. Obviously, that team is very early. They're both continuing to get their PhDs. A little unsure on like the software being deployed and who's going to finish and deploy that software. But I love that focus of like, look, what do we concentrate on? Weather. What do we concentrate as a submarket? Construction, because they need to understand weather in ways that other people don't know. So those are probably my top two.
And pretty decent traction without much focus or much real sales experience.
That's right.
You want to go next, Carl?
Yeah, I'd love to actually. I have to say, because of in my position, I can relate to the construction use case best. I think ClimaLinks also for me would be up there. We have some construction LPs actually in our fund, which I think are very much looking out for solutions like this. Also, I mentioned my background with railway operation with Deutsche Bahn. I think there's also along the road there are some interesting use cases apart from the construction that these guys would be able to tap. But I mean, obviously, construction is also for a long road ahead. I think the most attractive one, as the potential to innovate is so huge, especially in Germany. Actually, construction companies are way behind in digitalization and innovation. And I think second also for me, actually, I don't want to say what David said, but actually green growth for me also very, very interesting. I know actually also one LP company that would be really interested in this. I know that in Germany, the agricultural machinery that's driving around is really, really expensive, and obviously, they can do pretty much everything that you can imagine, but actually targeting those that cannot afford and still want to make smart decisions. And based on that, I think it's really interesting. Also, the installation process that you mentioned, which can just be plug-and-play solution, I think is really, really it's game-changing. Actually, I think, as I believe, I haven't had the competitive analysis, obviously, but what I've seen.
Awesome. I liked ClimaLinks. I coached them through Venture Lab, so I'm a little bit partial to that. In general, I thought all the companies were pretty solid and interesting. Biased, absolutely. And Elby, I thought had an interesting solution, especially given some of the traction that they've gotten from that. In general, though, it sounds like ClimaLinks got it. Okay, well, congrats then, Jake and Annie. That's an awesome win for you guys, and thanks for everyone.
Thank you very much.
You're very welcome.
Thank you very much.
Be sure to check it out. And of course, founders are generally first name at last name or at domainname.com. If anyone wants to reach out. And David, if folks want to reach out to you and learn more about Ecliptic Capital.
You're going to get it right, Matt, sooner or later. I promise.
Is it elliptical capital?
I just need to be on the show more, I think.
Okay. I think that'll do it.
I'm at Dave I am on Twitter/X. We're ecliptic.capital is the website. And then you can just look for Ecliptic Capital on LinkedIn. Look forward to talking to you guys. And thank you all for your time today.
And Carl, NCA?
Yes, just hit me up. I mean, it's Carl Illies on LinkedIn. I'm not on Twitter actually, so don't mind searching for me there. But NCA.VC, totally sector agnostic, focusing on pre-seed and seed stage startups, and really accompanying the startups along the way, all the way up to product market fit, basically exclusively pairing them with our LPs, which are totally keen on engaging and working with the startups that come through our process. So excited to talk to you guys. Hit me up, and looking forward to that.
Awesome and very cool. You guys, of course, as well know where to find us. It's Forward VC if you're interested in our partner in Climate Accelerator, or Climate Techies if you're interested in networking with other folks in the space. We've got 1,000+ climate funds, incubators, accelerators, and CVCs on there you can access. Find your ideal investor by stage, sector, geography, and check size. You can connect with other climate solutions, climate providers, corporates in our community and network on Slack and WhatsApp, as well as attend any of these sector-focused calls that we do on everything from food and ag to manufacturing, materials, energy generation, biodiversity. We're basically trying to build a choose your own adventure for the climate community to bring people together, because the most valuable thing, not just for you, but for the environment that we can do, is get the right people in the right rooms with the right other people. The startups, the corporates, the investors, the governments, the SMEs, bringing everyone together so that we can align the incentives. And we're all a little greedy. We know that we're all a little power hungry. We all want to make a little bit of money, but we also want to do it in a way that improves the world and the environment. And that's what we do through Climate Techies. We bring together all of those incentives and all the people so that everyone can win while everyone's winning. ClimateTechies.com for more details. And if you want to apply to an upcoming session of the Startup Tank, we do these every first Monday of the month. So you can check it out, thestartuptank.com. Go there, apply, and we will check your application and maybe give you a slot. And that's all, folks. Have a great one, a great night, and go eat some cell-grown fish or something awesome. We'll talk to you guys later.
Thanks, everyone. See ya.
Cheers.
Later, guys. Thank
Bye-bye.
you.